Hi everyone. Today we released our financial results for the year ended 30 June 2022. Despite challenging operating environments across many of our jurisdictions, we delivered a record year for earnings, cash flow and shareholder returns. And we accelerated our portfolio transformation, increasing our exposure to the metals critical to a low carbon future. I'd like to thank our teams around the world who have worked hard to deliver this result. Before I take you through our operating and financial results, I want to reflect on our safety performance. We will never be truly successful until every one of our people goes home safe and well at the end of every shift. This year, we did not achieve that. We are deeply saddened by the loss of one of our colleagues, Mr. Desmond Menes, a contractor who was fatally injured while undertaking electrical work at our vessel's mine at South Africa Manganese in November 2021. Our deepest sympathies are with Mr. Menes' family, friends and colleagues. We provided them with our support following this tragic incident and undertook a detailed investigation to understand what happened. The learnings were shared across our business and we held stop for safety conversations to discuss and learn from them to prevent a similar incident occurring at any of our operations again. Our total recordable injury frequency rate decreased by 12% in FY22 compared to our FY21 baseline, but we did not meet our target of a 20% reduction. We recognise that we must continue to improve our safety performance. During the first half of FY22, we undertook a review of our safety performance and identified areas for improvement. This formed the foundation of our Safety Improvement Program, a 3-year global program of work designed to achieve a step change in our safety performance. All forms of workplace misconduct present a threat to the physical and psychological health and safety of our people. In FY22, we continued to undertake a significant amount of work so our people feel safe, included and respected at work. We know there is always more to do and we are working to understand and respond to the risk factors for harassment, just as we do for other safety risks. More recently, our work has also been informed by broader industry learnings following the publication of key reports on this critical issue. Turning now to our operating and financial results. Our operations delivered to revised plans despite a challenging external environment which included managing the ongoing impacts of COVID-19, labour availability and extreme weather events. We achieved record production at Worsley Alumina. Hillside Aluminium and Moselle Aluminium continued to test their maximum technical capacity. At Cerro Matoso, we achieved a 22% increase in nickel production, and at Cannington, we exceeded our already increased production guidance as we transitioned to a new operating configuration, decommissioning the mine's shaft haulage system. Our portfolio changes, stable operating performance and implementation of innovative logistics solutions helped us to capitalise on significant price tailwinds and deliver a record 47% operating margin. Building on our excellent FY22 result, we expect group copper equivalent production to increase by a further 14% in FY23, as we realise the benefits from our team's delivery of improvement and productivity projects and investments to grow our business. Our stable operating performance, recent portfolio improvements and favourable commodity mix enabled us to deliver record earnings, cash flow and shareholder returns. We generated record underlying EBITDA of $4.8 billion and we achieved record underlying earnings of $2.6 billion. Free cash flow increased by more than 200% to $2.6 billion and we finished the period with net cash of $538 million after funding $1.5 billion of investments to improve our portfolio during the year. Our return on invested capital improved to a record 30.1%. As we continue to transform our portfolio, our capital management framework remains unchanged. A strong balance sheet is at the core of our strategy, and our framework is designed to reward shareholders as our financial performance improves. Reflecting our strong financial position and disciplined approach to capital management, the board has resolved to pay a record $648 million fully franked final ordinary dividend in respect of FY22 and $139 million fully franked special dividend, taking total dividends to a record 25.7 US cents per share for the year. Our total shareholder returns of $1.3 billion in respect of FY22, including our ongoing on-market share buyback, was also a record. And today, we have further expanded our capital management program by $156 million to $2.3 billion, leaving $250 million to be returned by September 2023. Over the past 7 years, our business has undergone a major transformation. The South32 of 2022 looks very different to when we were established back in 2015. And in the past year, we have made significant progress transforming our portfolio towards the metals critical to a low-carbon future. Our attractive commodity mix also includes a growth pipeline across development assets and exploration properties in these metals. During the year, we acquired a 45% interest in the Cerro Gordo copper mine in Chile. We acquired an additional 16.6% shareholding in Mozal Aluminium, which benefits from access to hydropower. And we achieved first production from the restart of the Brazil aluminium smelter using 100% renewable energy. These investments in our aluminium value chain have increased our low-carbon aluminium production capacity by 100%. During the year, we continue to take action to address climate change. This includes progressing decarbonisation activities designed to address our biggest emitting operations, taking significant steps to increase our exposure to the metals critical to a low-carbon future, and establishing new partnerships for collective action on climate change. In September, we will release our Climate Change Action Plan, setting out how we are managing the risks and capturing the opportunities which climate change presents, and protecting and unlocking longer-term value. The plan will be the subject of a non-binding advisory resolution at our 2022 Annual General Meeting. Looking ahead, we are well positioned heading into FY23 with our growing production profile and strong balance sheet. Longer term, we are well placed to capitalise on the increasing demand for base metals as the world transitions to a low-carbon future, with our current operations and growing pipeline of high-quality development and exploration opportunities. We will continue to position South32 for an exciting future over the next 12 months and beyond, keeping our focus on safety, optimising our existing operations, unlocking value from our portfolio, and identifying new opportunities to create value for all our stakeholders. Thank you.